And as we take a look at the market trade here today, we got to take a look at green on the screen in the grain and oilseed sector. A bit of a turnaround here today. Plenty of things to talk about, though, no doubt. Let's say good afternoon to Bryan Doherty, Senior Market Advisor with Total Farm Marketing, joining us. Bryan, good afternoon to you, sir. And the way the markets have been the last couple of weeks, it's nice to see a little bit of a rebound in the grains today, and a nice thing for us to talk about here on a Thursday, Brian.
It is. It was a pretty brutal couple of weeks where it just looks like there was a big money shift in commodities or out of commodities, I should say, and some pretty big drawdowns. Was whether it was metals or energy or wheat or corn or beans or wheat. I said wheat twice. Well, there's three wheats: Minneapolis, Chicago. So I guess I can triple that up, and Kansas City. So yeah, some pretty hard downs. Now some bounce recovery here. It's been an interesting last 24. Let's see, be a little bit more in 24 hours from yesterday's trade through today. In that we saw some double-digit losses again yesterday. It looked like more of the same piling on, and we saw that at a couple of occasions yesterday on corn in particular, and then it came back to finish positive. So we're starting to wonder if the selling interest isn't beginning to run out. We don't think this is a farmer-led push with heavy cash sales. You've got a 6 to 10 day that looks a little bit, maybe I'm going to say cooler but dry, and then a 11 to 15 day forecast that looks drier and warmer. So starting to see some things where the value has come into the market for the end user. Those who were short made good profits. We're probably seeing some short covering there, whether it's as the proverbial dead cat bounce or the start of maybe consolidation or recovery is yet to be argued. But I would think that lack of farmer selling gives this market a really good chance to see some speculative bottom picking and maybe a recovery.
Yeah, and you took the words right out of my mouth. What I was going to ask is, it feels like just some speculators maybe stepping back in on the break here, and then some of those end users maybe feels like they're trying to cover some of their needs here on the break a little bit, and maybe that could be what gives us a floor, gives us some support here, Brian.
Well, it's got to start somewhere, and often that's where it starts with the speculative interest saying enough, it's low enough, and they start coming in and buying, and then that helps to put a halt to some of this. I think a lot of traders who were short probably realize, in particular in the row crops, where we are time of year and how weather just becomes ultra critical through the second half of July and March. So, or March and August, as the crop, I was going to say, marches toward maturity and pollination, ear sets, all that good stuff where you need good weather. So there was some really good weather here in the last week for many producers who were um, very short on moisture, and so big relief. But it's been these kind of summer storms too, where we talk to farmer gets 4 inches of rain in an hour, and then 20 miles north they get 4/10 of an inch of rain. But nonetheless, good rains. It just gets more critical as we move here. If it does turn hotter and drier, um, given some of the struggles, in particular with the corn crop in late and mudded in areas, this could be yet problematic for production.
I want to focus first a little bit on the soybean crop here today. That was one of the leaders to the upside on Thursday. One has to wonder. I was thrown this question here today. Do you feel like the soybean markets really had a chance to react to the bullish numbers on the 30th? I mean, just with the momentum to the downside heavily, do you think that maybe the soybean market could have a delayed reaction to some of those numbers, Brian?
It could. I think it's what the report didn't say that is supportive, because we said, hey, it's a neutral report. It wasn't bearish. Everybody breathed a sigh of relief, and then the market fell apart anyways. And I think that that wording by the USGA to resurvey some key areas that we're planting. The question I think the market has to ask itself is, if we in fact do push these acres in, these 2 million that we're missing, if those get planted, you gotta for me, the question is, okay, they're planted in the second week of June, most of them, or third week. They're planted in northern, more tier states. do we really expect that to be robust, cream on top of the cake type yield? I gotta question that. And I think the market will question that too. The big winner today was soybean oil. It's been just hammered lately, but had a really strong day to day, over 300 points. Um, and then I think you might get some focus yet back on, really what does the world supply look like in some of these crops. So what we're seeing is, as we head toward the mid part of summer here, is good northern hemisphere crops, a shortfall of production in Brazilian soybeans, but all of the critical weather yet lies ahead. And I have a hunch that some of these bean ratings are going to have a tough time picking up if it does turn warmer and drier at the end of July here, because the old saying is just get beans to August, and then if Mother Nature cooperates, you never know what your yield could be, but it could be pretty good. I think that's going to be more of a challenge this year. We had so much of the crop in so late, and it got hammered really hard by that hot temperatures in some of those stretches in June. So sorry to be wordy, but I think there's just a lot of dynamics that maybe affected crop production that have been dismissed um, the last couple of weeks, and now there's maybe some second thought on that. And I think we saw it today in the market.
On the corn side, new crop contracts getting back around that $6 level as well in the futures trade. Corn was by far the weakest of the three grain complexes today, though, Brian. But, I look out around the countryside, I look at cash basis as well. That's still remaining relatively firm. A lot of sixes, mid sixes, even some low sevens in some areas. So it doesn't feel like cash basis is eroding super quickly like we saw the big sell off in futures on the corn side. But I wonder maybe just your thoughts in this market, both on a futures front and maybe with the cash side of things here, Brian.
Sure. Well, even before the market fell apart and before we got to first notice day where most bids move over to the September contract. I say most because that wasn't the case this year. In fact, talked to a farmer this morning in Illinois, said their elevator is still basing it off of July, and they'll base off July through the end of this week. So they said they're not sure what Monday's going to bring. But you've got this new crop. September now is your front month. So there's this natural inclination to expect that there'll be more inventory available by September and the southern hemisphere crop comes on board. But watch the basis. It's been the leader actually since 2019, time and time and time again, which continues to suggest to us that you looked at test weight issues in 19. All of these things bled into 20, and the pandemic goes down, and the market comes back. And it was again a cash led rally. Still wonder if we're not carrying in a little less corn than the USDA numbers indicate. And then we have this year with late planted corn and some of this stuff that in the north, boy, I don't want to jinx it here, but it's in okay shape. But I don't think that test weight's going to be good there. So I have to have a little bit of an optimistic bone in this corn market right now because the cost of production, what it takes for farmers to sell this, I just don't see them jumping through hoops to sell anything. Look for the supply side to tighten up on corn. If July is kind of a hit or miss on weather, hit or miss on weather doesn't usually add yield.
I should ask real quick as well on the weather front. We had that derecho move through parts of the Corn Belt here this week. Have you heard from any of your customers about any major damage? I've heard of a little bit, but it doesn't appear that it was anything extreme. Maybe just some corn laying down that could, find its way
Eh,
back upright.
I have not talked to any farmers or have seen, and I don't comb the internet for this, but I haven't seen any pictures of like storage bins, knocked over like they were in 19, was it 19 or 20 in the Draco hit. Nothing like we saw in Iowa, but I am talking to producers who localized, yeah, they've had some corn knocked down, hail damage, strong winds, not ideal. Again, sort of another little string pulling at this total yield number. It all adds up when you're kind of tight on inventory, and um, I don't think I don't want to get ahead of myself. I don't think this is a major damage widespread event. I think I want to say more localized. And when I say more local, I'm talking from a national perspective. It may be devastating in certain areas, but I don't think it's enough to really make a big difference on the global radar or the whole, I should say global, the whole corn crop radar.
Very true. Brian, let's talk the wheat markets here today as well. They were probably right behind the soybean market, if not a little bit ahead of it at times. If you look at spring wheat, I guess maybe ahead of the bean market, but really strong moves in wheat here today. What's your thoughts across the board there? Whether we're talking Chicago, KC, Minneapolis wheat, what's standing out to you here on today's bounce back?
Well, what's standing out, first of all, is the market got brutally, I think, undervalued and oversold. It just took everything away from pre-war. And gosh, reading an article this morning, 22% of the Ukrainian farmland is under Russian control right now. Um, nothing is business as usual there, and yet the market is totally dismissed. If you looked at nothing else at price when the war hit to price here recently, so very undervalued, extreme low numbers on stochastics, crossover buy signals here. So you're starting to see some technical activity, some technical signals. I think the end user is going to move up the ladder pretty quick to start buying this stuff. It went on sale here this last week. And as far as the long term picture, yep, we're still high priced, but we're high priced from a perspective of um, there's just a limited amount of supply to the world, and it's kind of touch and go. And when the equity money probably rebalanced their portfolios at the end of June, I think a big part of this was exiting row crops in this rebalancing, and wheat was the kind of the brunt of it. Albeit wheat, you could argue got along the way much too high in price, but right now I think it's a value to the end user. Um, I just don't see anywhere in the world other than maybe in Russia where you've got this sort of robust crop that just, alleviates any major concerns or fears. Every continent seems to have some issues with their wheat production.
Well, I know as well. You mentioned it a little bit, just with the financial markets too, and some of that money flow out. We got a U.S. dollar that's up near new highs, 107. We got reports about maybe stimulus in the Chinese economy out there as well. You look at the fears on Wall Street, maybe eased slightly today, but still, this the recession talk and everything else. This is going to be a major obstacle in front of the grain markets moving forward, Brian.
Well, it is, and it's kind of the what do they call it, the 800-pound gorilla on the back of a bull market is you've got this dollar that just doesn't let up right now, and you go back, it's about 15% higher than it was in the fall. So if you think about that, if nothing else changed, it costs 15% more just based on the dollar. Uh, if you're a buyer of U.S. wheat, you've got that to fight and contend, and then you got higher transportation costs and those type of things. You mentioned the stimulus in China. That's good news. Looking to try and turn their economy around some. Yet at the same time, the sobering news: Shanghai, again, kind of epicenter of economic and financial. Maybe going to go back on lockdowns again. Just can't. So we're seeing a spike in COVID. So just a lot of topsy turvy stuff. But from a long term perspective, the wheat's got a hard road in front of it in the sense that, Jesse, to rally like we did after the war, that's a lot of perception. The market moves on perceptions. There may not be any wheat moved out of Ukraine. That's changed a little bit. Well, they'll build silos. They'll do this. There's behind the scenes working. I still think it's a chaotic mess, but um, to get to those kind of levels, I think it now takes a weather event of pretty sizable magnitude to get end users to continue to buy on strength or speculators to continue to buy on strength.
Well, Brian, let's move over to the livestock trade here today. The hog market's been looking pretty good the last couple of sessions. Another decent one today, maybe not as good as the last couple of days, but still looking fairly robust in hogs on this Thursday. Let's start there. What are you thinking in that hog trade this week?
Well, I think the back months really picked it up. I want to say we talked about this last week that there was such a big discrepancy between front month cash markets, futures, and then you go back a couple months into the fall, and we're starting to close that gap a little bit. So nice move in the October contracts, December contracts, the next last couple of sessions. All of a sudden today we saw the October contract hit its highest level, didn't quite close at its highest level, but hit its highest level since the very latter part of April. So very encouraging there. Cattle market continues to kind of chop around, trend in a sideways to higher fashion. I'd like to say that cash is starting to firm. I do like the cutout values, but I do not like the idea that we're up against so much between higher interest rates, inflationary concerns, and higher energy. We've talked about it before. It just doesn't seem like there's this sort of mindset that consumers are going to, just go out and eat all the time and run to the grocery store and pick up steak and not even look at the cost of it anymore. I think that's really prevalent where people are just very cautious shoppers. So it takes away some of our shine on where the live cattle market can go. Lastly, I'll finish with feeders in the complex. Really nice inverted head and shoulders formation developing. We're developing the right shoulder now. If corn prices don't rally sharply, I think the feeder market has some room to move higher, but it may need a little help from those July and or April and June contracts for next year and the lives. They're holding good premium, but they're kind of stuck right now.
Yeah, and I know watching cash cattle trade this week, finally starting to see a little activity today, but it's nothing really great to write home about. Brian, as well, before we run out of time, dairy market, any thoughts there for us real quick?
Well, the key word is volatile, volatility, up sharply today, but that's after a gap low or a horrible close yesterday. So we're getting a bit of a bounce. Still good price, $22, but not 25. So if you think about that, three over 25 anyway. The market's down about 12% off its high, um, or 12% in value from its high. If you could look at this and go, well, geez, what's the catalyst here? I'm concerned that the dairy market might have it right in that it's maybe a good guide to try and anticipate, demand. And nice rebound today, probably more in the China stimulus news, anticipating that that could help the dairy products move overseas. But I think that market, it's going to have a tough time getting back to 25 without either higher corn prices or something to stimulate it. We've got good demand, but I don't think demand alone can hold you up in that 24, 25. Anyway, my point of all this is that if I'm a dairy producer, I was just reminded how fast things can fall down. I can go from 25 to 21, 40. So I can drop that fast in 2.5 weeks. If we rally up, you've got to sell into those rallies and be consistent at it.
Well, Brian, great stuff. And if, of course, if folks need a little advice, they need a little help with their marketing, I know they can reach out to you and the team there at Total Farm Marketing very easily, can't they?
They can. Best way to do that, I think, is with a phone call, 800-334-9779. Just give us a quick shout. We'll listen to your situation, see if we can come up with any ideas for you.
And you can also find more at totalfarmmarketing.com. With that, Brian Doherty at Total Farm Marketing. Appreciate it as always, sir. Have a great weekend.
Thank you, sir.
Brian Doherty, Total Farm Marketing, joining us today here on Market Talk. That's going to do it for the show today. Have yourself a great rest of your Thursday. Find us at markettalkag.com. I'm Jesse Allen. Have a good afternoon.